Okay, hey, this is Jeff Scott, and this is the 25th, I believe, of November. It is 10 a.m., and futures are not out. I entitled today, Will Santa Visit This Year? Last weekend, I spent with George Lee and a bunch of traders in Vegas, and looking forward to my meeting that will be here in a couple of days. I'll talk about that in a few minutes. Certainly been a tough market. I've seen some of my profits for the year disappear, although I'm still very positive on the year. I hope you are as well. Um, it's been a tough market. I can play the long side, I can play the short side. This one's been tough both ways because, as I talked earlier in the year, every time the market started moving up, you thought it was breaking out to the upside, it pulled back, and now we're continuously moving down. But just when you think it's safe to go short, the market gets a couple of days to the upside, and some bear market rallies can be ferocious and make you whipsaw your money. So I've gotten smaller on positions. I've even sold some of my long-term tech stocks that I had puts on like Facebook, and I'm just waiting for things to quiet down before I go all in or all out. Most things I got left either some out of the money option positions that are cheap or have puts on any holdings just to protect whatever profits I still have. And believe me, putting puts on your existing positions is like paying an income tax. And I live in Florida for a reason. I don't like paying taxes. Disclaimer, this is for education purposes only, and anything that I tell you is in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for all the programs that I use, and no one pays me to say good or bad things about them. Trading involves risk, and you alone are responsible for that risk. I always entitle my trading style as Be Your Own Guru. I have learned from some very smart people who are on this slide, such as Ian Woodward, Cancelim from O'Neill, Morales and Catcher, George Lee, John Person, Van Tharp, and Cigar from Superior Profit. There are a lot of different things that I like to do, and I've come up with my own blend of trading, which is a mixture of them and others. I also do at least one live event in Florida per year. It's coming up on Wednesday this week, November 28th. Got a nice number of registrants. It always seems to pop when I open up to folks that just want to get the recordings. We'll see what bandwidth is like. If I can broadcast my desktop during the meeting, I will. I never promise that because you never know what bandwidth is like in a hotel. And my loyalty has to be to the folks in the room because the ones that are not in the room will benefit from that by getting good recordings that I'll send out that night. So you don't miss much, just maybe some of the interaction. Some of the stuff is there. We've had some good luck at these meetings, picking some stocks that have more than paid for the meeting over the next couple of weeks. Those that attend, we're going to actually do dinner at the local Capitol Grill. I was on my boat, anchor management this weekend, had a outstanding time, but just realized that having 20 people on the boat is going to be a little crowded. We had about 16, 17, and I sort of came to the realization that probably better off going to a steakhouse. Plus the boat's about 15, 20 minutes away from the hotel. During the meeting, so I will pay for dinner on Tuesday Eve. Wednesday during the meeting, I'll provide breakfast, lunch, and snacks. I promise you'll gain weight. Those that are live will get screencast videos of each presentation and shared indicators that are non-proprietary except to me. Not enough interest for the golf tournament this year, so we won't be doing that. And I will accept a couple more remotes. I think for the live, we're done. If you really want to come live and you haven't signed up, send me an email quickly. If you want the remote, all you need to do is do PayPal to mdoc@mindspring.com, and I'll follow up with a thank you and a link to the Dropbox, which already has the initial pre-seminar webinar. I try to make this a good value, and I have a few other surprises for those that are participating. I own a lot of programs. That's obvious when you look at my desktop. What I need is TradeStation and Thinkorswim with my indicators that I like to use. HGSI, which is the best analytic program post-market. EdgeRater is great. Now, the cigar stuff, especially his Edge products, have really become instrumental for me intraday. And they may be the closest thing to as good as HGSI from a top-down approach. They don't have integrated charts and data. HGSI still remains a bargain, but these can be done intraday. And for those that trade markets outside the US, because they use Reuters, Thomson Reuters as their data feed, you can trade India, China, wherever you want. I think that's why a lot of people like his products. HGSI, here's the website. I'm independent. I don't have any royalties or payments if you buy something from them, but I do want to point out a free 30-day trial, and then under investing strategies, you'll see hundreds of movies like this from myself and Ron Brown. Stock patterns are cyclical. We are clearly on the downside here as fear is palpable. Now, the issue always is, are we selling off to a bear? Are we bouncing? And every time we get a little bounce, you get shaken out, and then the market goes lower, and you watch your account get smaller and smaller. You've got to be careful here. For me, that means I've been selling some bear call spreads, which means I sell a call near the money, and I buy a call out of the money. I collect premium and assume it will expire worthless unless the market turns around. That is a credit, which means I get paid. I buy puts, which means I buy an option that benefits if the market goes down. I pay for that, and puts become expensive. Now, when you have a volatile market. Now, if you have long positions, if you buy a put, it's like buying insurance that you're sort of locking in the price. Now, I can reduce the price of that insurance by selling calls or selling call spreads and even selling a deep out of the money put to help pay for that put. I'm doing all of those. Shorting stock, I do that. And contra ETFs, buying things that feel like they're long, but they go up when the market goes down, like QID, TZA, SDS, SOXS, LABD, a number of things that have both up and down depending upon usually the fourth letter. We'll talk about all those at my live meeting. Friday, hard to make much of Friday. It's a low volume day. I want to call out United Airlines, one of the best looking charts, and it's an airline, maybe benefits from the lower gas. But as I look through, is anything all red? Yeah, financials continue to be weak, and they're all red here. So that's never good. A couple regional banks popped up green. Insurers looked red as well. It's a tough market out there. Energy, pretty weak as well. Take a look at the major markets in Thinkorswim. This is daily, make sure. Sometimes I don't realize I'm looking at weekly. Let's maximize a sell. So let's go to 1 year and make the comments. We've had a market that topped initially in late January, topped again in September, sort of a double top in here, and is sold off hard. We are deep below the 200-day moving average. The 50 is approaching the 200, but still has a ways to go before a death cross. Volume is weak. We have not undercut the October low yet, and that may be our first target. At some point, we will bounce. When we bounce, we're going to have to break above this 200, or we'll potentially come down and set lower lows. This is a market that could bounce anytime, but right now looks pretty darn weak. If I look at the NASDAQ 100, where some of these big tech names like Apple, Google, Facebook, Amazon have suffered, sits a similar thing, but the November low has already cut the undercut, the October low, and is now challenging or getting closer to the February and March lows. Weak market, hard to say anything positive about it. Again, the 50 above the 200, at least as of now. The Dow, let me set this out to a full year, and you'll see it took a while for the Dow to set new highs, but it did. And is sold off and looks kind of like the S&P, not much reason to belabor this. The Russell has been actually the weakest of all of them, and is actually maybe looks a little stronger as it's had a couple of days where it closed higher than it opened but really hasn't, it's stalling from a close perspective, but at least maybe some stabilization there, maybe something to build upon. The VIX is sort of in no man's land. It's not as high as it's been at 24, but it's at 20. It's certainly a lot higher than it's been over the last several months. So the VIX is elevated, not massively so, and interesting to see which way it goes. It's above the moving averages, which means it probably has a fair amount of support. And the dollar, which depends on your perspective, may or may not be your friend. The dollar is, at least from a year's perspective, right off the highs, had a bullish engulfing pattern on Friday. So the dollar is strong. If I look at, instead, at weekly charts, again, these are futures, not the cash indexes. And just standing back, you could see how all the major indexes have broken down below their 50 weekly. The VIX is sitting off of its highs. And the dollar, frankly, back in January of 18, peaked at 103.82, so it's considerably off that. But after falling from 103 down to 88, it's had a fairly substantial move higher. All right. Let's look at some of the internals. Rates, this is the 10-year on the left, 30-year on the right, continue to fall. I'm still above areas that I've put on the chart of long-term that were when I was concerned about the rates. The yield curve, no one's talking about it anymore. Here's the spread. Here is when it becomes flat. Here's the market turning down already. As I've said before, it's when the market yield curve turns up that the market usually sells off. AD lines are leading the market lower, both on the small stocks and on the large stocks. In fact, if I look at the NYSE AD line in white, and you could see the diamonds, Qs, spiders, IWM, and transports all falling. And interestingly, with rates coming down, no surprise, the price of bonds went up, and TLT is the only thing that turned up this week. Breadth is deteriorating towards oversold. It's not at the lows by any means, but both stocks above the 200-day and stocks above the 40-day have dropped down this week. And the 3-month new high, new low is at a reversal area. So maybe after a washout Monday or Tuesday, we might get some opportunity for a reversal. Now, Powell is speaking Wednesday, and if he comes out and talks down the third rate hike next year, you might see the markets bounce. My initial read on the McClellan was not too much, except as I look at it, the McClellan is still falling, and if anything, the summation index on the daily has gone flat, and it's been heading up on the oscillator. Is that a bullish divergence? Maybe. Or should I be more concerned that we're not washed out on breadth as we were over here, and therefore we got more to follow? So I think we'll have to see how that plays out. On the weekly, a similar picture. Other measures are the internals. My buckets show that 2/3 of the stocks in the S&P 1500 are below the midline in their Bollinger Bands, but no signals. We don't have a preponderance of stocks below or above their Bollinger Bands. There's been no Hindenburg since October, no shocker, because you have to have new highs, and you have 0.07% new highs on the NYSE and 0.37 on the NASDAQ. I will point out that once again, this Hindenburg, which we commented about how many signals we had over a month's period of time, was a great predictor of the market pain that we've been in. Market tone, more bearish than neutral, and the sector strength deteriorated as well. The lone holdout is real estate. Canaries in the coal mine, we talked about them 2 weeks ago that they're about to have a death cross. Well, they've had their death cross. They continue to follow. Now, the only thing that I see optimistic about this chart is that whenever we sort of spike down on the high jump, which I would now consider the low jump, we get a bounce, and we've spiked down to the lowest we've been, at least in a year, an extension to the downside. So we'll see maybe if that drives a bounce this week. I really don't think the market's going to do much until the Apples, the Amazons, the Googles, the bookings start to do something. Facebook may be its own beast with its issues around security. News and earnings, the red dots are the big things. So GDP, international trade, jobless claims on Thursday. And I think one of the big ones is going to be Jerome Powell speaking. And then you'll have FOMC minutes from the prior month just to get a sense of whether there's been any discussion of slowing down the hikes. We're seeing a very interesting war in the press between the president and the Fed head, who, by the way, he hired, and then also between the Supreme Court and the president. Very unusual. If we look at earnings, you can see there's still quite a few earnings to come out this week. If you have any of these, it's a big deal to you. Jinko Solar, Buckle. On Tuesday, we got some banks. We got Cracker Barrel. My son said he's going short on Cracker Barrel, so that means we should go long based upon his experience. Burlington, Tiffany's, Dick's, Viva, still a lot of things, a lot of retail on there this week. As I say down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Now, it will be interesting also from a news perspective whether the market even cares about the Brexit. But it appears that they might have a deal done on the Brexit. Maybe that takes out a little bit of the risk in the market. Market thoughts that continue the November slide. News continues to be a catalyst, whether it's rates, oil, immigration caravans, Congress, Brexit, Italian bonds. Fed speak on Wednesday is likely to move the market. NASDAQ 100 generals are still bleeding out. No time for heroes. I've raised cash in a way to follow through day. Waiting for the market to lead higher before jumping does not mean you will miss a big move. In fact, whipsaws occur when one jumps before it's time. We do our usual top-down review. It's not going to be an uplifting, bullish report for those of you that might be hoping for that. So let's go do my usual top-down. Actually, let's go into TradeStation first. I think I got it up and running here. I do. And let's look at my market force and divergences to see if there's anything here that I could make to be positive. And the answer is probably not. Here's the E-mini futures, and I think it's blue. You can see we got 1, red paint bars. 2, we got arrows down on daily, weekly, and monthly with red paint bars. 3, we're at the border of the envelope. That might be concerning a little bit. I like to see it get below, and then we should see a bounce. 4, we don't see any MACD divergence dots. 5, we have a high jump that's extremely low, but not at an extreme. 6, we've got a weekly bongo that's red. I see a very bearish looking picture, but one that it might not shock me sometime this week to see a bounce. The NASDAQ. Now the difference here is we've got some MACD divergence on it. The high jump's almost at the low of the year. Perhaps a little bit more pressure for a bounce there, but still bearish. The Dow futures look a lot like the S&P futures. Nothing there to get excited about. You're at the lowest extension to the downside, or the lowest extension to the downside, the Dow all year. The high jump is 0. And mid caps, EMD, look a lot like the Dow. So nothing to get too excited there. If we want to show that things can actually be green, here is the dollar and a new buy-sell on the system of the dollar. Buys on daily, weekly, and monthly. It does have some MACD divergence on the weekly. High jump at 81%. So clearly a weakness in the market everywhere that I look. Can't be good for stocks or much of anything else. Let's go down to the market analysts and sector groups. Major markets plus, hit warehouse view and open up the top 24. Let's go to top-down view. And the first thing we notice is dollar volatility and gold on top. Never good for stocks. Interestingly, oil and commodities are on the bottom. Probably not a surprise with the strength in the dollar. Let's take a look at some of our favorites. We'll start with the S&P 500 and make sure. And what do we see? As we showed you on the on the Thinkorswim, we're getting pretty low on the high jump. This is cash markets, not futures. So we've not taken out the October lows yet. Closed near the low of the day on Friday. Hard to say anything positive about this, except someday everything bounces. the Dow Jones Industrials, but someday doesn't have to be tomorrow. Similarly ugly, except it did have a gap down, still not below the October lows. Maybe that'll be some kind of an island reversal. We'll gap up. Be nice to dream. If you're long, NASDAQ composite, another weak sister. Did have a green bar, which meant it closed higher than it opened, but it's still near the lows, has taken out the October lows. And then if I look at the Russell futures, I see the Russell futures, had a couple of green days, as I mentioned before, but also bouncing around their lows. Really hard to get excited by anything in this market. Now, I guess cash is king, and you can see the dollar's right off the high, sitting on the 17 and the 8-day exponential. Dollar is strong. Another thing that's high is the VIX. Now, the interesting thing is with the when I say high, it's closed around 21 and change. It's much higher than it's been basing. Be nice to see a spike, because a spike might lead to a washout day and then give a chance for the bulls to get back into this market. If I look at gold, if the dollar's strong, gold will be weak, except gold is also a risk currency, so gold is holding its own, but still in a downtrend. In fact, if I throw on the weekly chart, you can see what I mean by that. Sold off from substantially higher levels. So gold doesn't look so great, sort of as good as anything I've shown you, though, except for the dollar and the VIX, and silver underperforming gold. All right, indexes look really good, don't they? This is totally to the downside. If we look at industry groups, we have 174. Let's see which ones have momentum to the upside. We've got surprisingly 52 over the last 5 days, and we've got over the last 2 days. If I look a little bit longer, over 5 days, I've only got 13 groups to the upside. To the downside, short term, I only have 17 groups, so there was some positivity over the last couple of days. Thursday, I guess, was a strong day. But if I go down and I look at 5 days to the downside, I still see 83. So short term, we had a little bit of some bullish signs, but over the intermediate term, the markets are still weak. That's how I interpret the 2 and the 5 day. Let's take a look at some of the groups at the top of the 2-day force. Right click on biotech. Now, I actually have a position in Tesaro. Sometimes you just get lucky. I'd like to tell you that I found this, and I predicted on the bottom. I didn't. I actually bought it up here. Still have my options, and then there was a takeover intent. You can see the 2 kahunas and the big volume. Now I'm going to wait and see what happens. It's got resistance at the 200. My guess is that the takeout rumors have validity. They've got a nice pipeline. We'll see if they get taken out at higher levels. There was an analyst that put out targets in the 60 to 80 in a takeout. That seems a little bizarre. I would just be accumulating shares instead of doing that. In Oviva, a very strong looking chart. This made my buy watch list. Multiple mobile breakouts, pocket pivots, volume picking up. This is a small biotech play. That one has taken out prior highs, or is at prior highs. Doesn't make any, doesn't show any earnings in the next couple of quarters, but it does have some earnings the last several quarters. This is probably a data missing, not really zero. Biogen IDEC, one of the generals, not so good. Bluebird Bio, not so good. Editas, not so good. All these stocks have big volume, and they had some updates on Friday, so they actually made the list, but they're all down in their pattern. I like buying things that seem to be moving lower left, upper right, and there was only one in that group. The first 2 that made sense to me. Semiconductor devices, nice to see them up here because they've been getting clobbered. We'll start with AMD, which had been a darling on the way up and had a good day on Friday, so it made the list. It was up 3.5% on 54 million shares. Is this a bottom? Is that 200-day going to hold? It's not. It's a falling knife still, but if you wanted to give it a wide stop, that 200-day moving average, I wouldn't let it get much below that. You could start nibbling here, although I don't recommend it. I don't buy knives. Microchip technology and TIS, NXP on semiconductor. This looked interesting to me. It makes some money, starting to move up off of a bottom. It's still a downtrend. Analog devices. So these are all positive because they've had some positive days the last couple of days in huge volume, but nothing that knocks my socks off. Application software. Now I see something that I like. Autodesk. Not the one that I was thinking of. Sideways at best. And so why did this make the list? On Friday it was, hard to believe it was up. Oh, it's because of the big move up on Thursday. A Bible gap up on Thursday, probably on earnings. Next earnings not to March. I suspect that's what it was. So this one had a big earnings move and then sold off a little bit on Friday. It still doesn't do anything for me except look at this earnings per share growth coming into the stock. This is a turnaround play. Still an expensive stock. Here's the one that's interesting. This is a ANY, and it reminds me a lot of Tandem, where it did absolutely nothing for months, had some volume coming in. I'd be very careful playing this stock because these stocks have a tendency to come back to baseline, which here is about 2. But this looks like an interesting short-term play, but you got to be awake and following this. It had a huge move up last week, and then it sold off on, so this must have been Monday, Tuesday, Wednesday. Looks like I'm missing a couple days here. Let me see. That's Friday, Wednesday. All right, so Monday and Tuesday, but had a huge move on Wednesday, sold off a bit on Thursday, came back on Friday. That one looks interesting. At least something's happening. Twilio, it's not really that bad looking of a pattern. It's kind of junky here, sitting at a confluence of moving averages, does not make money, not that interesting. These stocks have all been beat up. Adobe, Zendesk. It's hard for me to buy these stocks. I need to see basis setting up and some momentum. Specialty pharma, I think Horizon's on this list. This is one of my favorites. Couple things in here. This might be an interesting group to be looking at. We've got Amarin. This is one my son did well on. Pull back to the 50, wants to go higher. This is one that might be worth nibbling on. BeiGene, a Chinese biotech. Jazz. These are all deep in their pattern. Heron, interesting. This stock on lots of upgrades and news went up to 40. Nothing's really changed. They've got a really cool non-narcotic surgical pain drug. Imagine if they inject something into your wound and you have no pain for a week. How many people could avoid narcotics? They have a high closed doji here, 2 up days in a row. Again, it's a downtrend. It's hard to get excited. At some point, I expect this thing to go higher on their pain med as it gets closer to approval. But not looking that exciting. China. Man, I'd love to see something that's looks great to buy. And so far, I'm not seeing that much. Maybe it's because it's a lousy market. And what is a market but a bunch of stocks? And I mentioned Horizon. Let's look at a couple. Let's see what I've got. Well, we'll look at Horizon eventually. Airlines. Best chart of the bunch is United Airlines. Let's take a look at what we got here. American moving even more. So who benefits from cheap oil? Planes. So what do we got here? American Airlines meandering up, sitting on its 50. Global breakout from a squeeze. Don't like its earnings per share growth. Not a bad buy point. I'd rather it be above the 200. Here's one that's running away. United Airlines, a leader in this market. And here's Delta near its highs. Copa, South American airline. Ryanair. Here's an interesting one. This is GOL, which is in the midst of a pretty nice move up. Not on the basis of earnings per share growth, perhaps more about turnaround in South America. Sorry about that. Entertainment content. This one had a good week, although it sold off on Friday. This is Billy. Take a look at Wednesday. It had a viable gap up, mobile breakup from a squeeze of Kahuna. This is an IPO. This looks interesting. It's been going sideways when the market's been going down. What does that tell you about the relative strength of this stock? Also, the Fox A and Fox facing and breaking out here looks interesting. Both Fox A and Fox B, similar pattern. All right, so a couple of things in entertainment that looked interesting. Infrastructure software. See if we like anything here. Hard to find great patterns, but that's not a shocker. We've been in either a bear market or a bearish market. OKTA kind of down in its pattern. Red Hat looks like a takeout. It is a takeout. FireEye. I'm looking for something that I want to buy. Well, Proofpoint fell off hard. And I still don't see one. Not going to find one there. Medical equipment, made some money in this group here with Tandem. Talk about strong stocks that have fallen, and now we start looking at fallen angels here because this is a fallen angel. This is Align Technology. This is a great looking short, breaking down at the 200-day moving average, bouncing at the 50 rather, bouncing at the 200, then breaking the 200 and coming all the way down to 195, 190. Bounced a little bit. I never understood the pricing on this stock. I did short some of it. The earnings per share growth do not support the price or the multiple, but I always thought it was the newness of the Invisalign. Align Technology selling off hard, stabilizing here. Maybe it's found the bottom, but I don't know how to say that yet. Tandem similarly. Another stock. This was one of the ones that we gave you earlier this year. Huge run up. I still have a few shares. I sold off most on the way up. I guess it reminded me why you take profits on the way up, because you avoid losing them on the way down if you're going to take them off. Hologics, kind of loosey. Boy, these are the best of the best. Telecom carriers. These are somewhat defensive, and some of them pay nice dividends. There's 8.6 on Vodafone. Now, problem is it a new uptrend, or is it a falling knife and it can't get above the 50? Beauty in the eye of the beholder. It does pay an 8.6% dividend. And yes, why did it make it? It made it because it's been up the last couple of days, and it's a huge volume stock. That's how you get force. Zio Group downtrend. Intelsat close. Now this one, why would Iridium Communications, a satellite player, look so good? It's not the earnings, it's not the dividend, but here's a stock that's breaking out off of the 50. Looked good when I first spied it, still looks good. That might be something, one of the better looking stocks out there. Then we get to the index. I always go down through the top 10 and then I look at what I'm buying. E-commerce. This is interesting. Overstock.com was a retail thing that got into blockchain, is now becoming a blockchain company. Now, this is a bottom fishing buy at best. I don't know how to value this stock. It does make money. They are splitting their company, mobile breakup from a squeeze, a Kahuna, a big move, a PSAR off the bottom, reversal. This is interesting. I don't like the fundamentals. It's worth reading more about. That's Overstock. BABA, I took the bullish case. George took the bearish case. Obviously, the determinant's going to be the market. It was sort of a counterpoint last week. And, looking at 4 days of movement on the stock, I would say just put a weekly chart and make it simple. It did nothing on the week. So neither of us are right. Is this putting in a bottom and going to go higher? Or is this just a pit stop on the way to a deeper bear market? I don't think we know. I think the market's what will drive it. I do like the earnings per share that are starting to come into the stock as we get out a quarter. But, it is hard to buy a stock where you could draw a trend line that hasn't broken and where the 50 is a blanket over the price action. Wayfair, eBay, Etsy, another one of the stronger performers, good earnings per share growth, but a high multiple, sort of going sideways here, had good earnings and came right back to the 50. So I'm sure you're excited, energized by the bullish report I'm giving you. Let's look at a couple of other things. Home builders, maybe with interest rates down, new starts looked awful, but homeowners, have they hit a bottom and are moving up? So here's D.H. Horton, not my favorite. Lennar, it's the same. Pulte starting to move up. Toll Brothers looks the same. KB. So they all are in the bottom of their pattern, but they all got the same pattern, and perhaps they're going to start to turn around. And then casinos, where do you start playing Wynn or something like that? And talk about downtrends. I remember when Steve Wynn got into trouble and the stock earlier in the year did a game around 180, 200. And this is just a steady downtrend, except it's going sideways now. And when does this become a value play? Probably when it starts going up, which hasn't happened yet. So interesting market out there. It is certainly not one for the faint of heart. I'll show you my buy watch list, which is actually pretty big. Let's look at industry groups. So a bunch of REITs again. We saw this last week, especially healthcare REITs, where they pay a dividend, as you can see here. So REITs look good. Telecom carriers, here's consolidated. I didn't show you that one. So this is a watch list. It's not stocks that I'm buying, which is a big difference. And I'll show you how I'm going to manage that in a second. Consolidated holdings, it's holding up very well in this market, especially you can see what the spiders are doing. It pays an 11.6% dividend. Kramer has talked about stocks with outsized dividends and whether it's sustainable or not. So that's something I'd want to look at. When I look at the earnings, they look strong. They are well, I won't say strong. The dividend, rather, has been pretty steady. I'm not sure how the earnings are enough to pay it. So that might be something to look at. See if anything I want to show up. Tilray is a marijuana stock. Really setting down here and basing. It's mostly something I'm watching, not jumping in and buying right away. Don't know anything about Micro Focus, and its volume's not great. But here's a stock that's gone sideways for 7 months, broke out above its 200-day moving average. I like this. This does not bother me on the high jump because the high jump only matters to me if I'm in an uptrend that's sustained, and this is one that's just starting. I mentioned Spear 3D, Innoviva. Euronet Worldwide was one I liked last weekend when I was at Georgia's meeting. I like it even more. Uptrend, pull back into the 50 with a squeeze, needs some momentum off of here. I like that pattern. Neogenomics, it's not yet, but I'm intrigued by a stock that's come down to the 50, has a high close doji. I'm going to look for a kahuna or reason to get in. Solar Edge, probably a low risk buy because it's based for about a month and a half, but in a land of ugly charts, and this is an ugly chart, okay, I've got 200-day moving average 10 points above, which has to be considered resistance. I've got a mobile breakout from a squeeze, a pocket pivot, and a kahuna. Solar Edge, not a great picture. One of the best stocks in the market right now, Canada Goose. Pulled back a little bit this week, but certainly for an IPO has done extremely well. Was in Chicago a couple weeks ago, and there was a lineup in guard control to let people in the store, a retail store with a line. Imagine that. Showed you the satellite play already. Well, that's about it to the upside. Let's take a look at some of the stocks I'm interested in shorting or looking at potential shorts. Did I not put them in here? Hold on a second. All right, where are they? And if they're not in here, I'm going to get them in here for you. Yep. These are some stocks that I put on my list to watch to see if they become shortable. Here is a stock that peaked. It's got lower highs here. It's got a breakdown below the 200. I like to buy to short stocks that are near their highs, not stocks that are already beaten down. Apple is in a falling knife mode. Hard to short it here, but a run up into the 200 might set up a decent short. Arista Networks can't get ahead of itself. Looks shortable right here. Cincinnati Financial, again, breaking down, but above its moving averages, a watch list stock. Concho Resources, probably too far gone already. Same with Diamondback Energy. EC was a short, probably up here, if not higher. It's broken down. Catalibre failed at the 200, 17 and 50 with a low close doji here. This one's going down probably at least to take out its prior lows. New Relic, 50s turned down, got a death cross. Like to see it break down before I take the short. Old Dominion, stock that failing at the moving averages. Parker Hannifin failed at the moving averages. SAP is already on its way down. SBA Communications, not yet, but looks to me like might be setting up to break down. Texas Instruments is already broken down. Looks like it's going to fail here at the 50. Travelers has failed at the 200 multiple times. Set my stop at the 200. Now, I find most of these by going into my trade station and going into my screener. Well, first thing I do is I start finding them by scanning and looking for weekly low close dojis. I look for sell signals coming into the stock. I look for stocks that are running into resistance. Then I go into my screener. In this case, I had several hundred stocks for the potential sells. And I run through them, and this is what I like to see. We'll pick one. Bear with me. Here's a stock that's got a new weekly sell signal in a downtrend, below support, below resistance, and OBV leading to the downside as well. So I'll go through my list, and I'll build a list of sells and potential John Person buys. I take my final buy watch list. We'll go look at Horizon in a second, and I dump it into a radar screen. And so somewhere down here on a big monitor, you can see a lot of stocks. I have my buys, my filtered buys, which are the ones I screen for John stuff, and I'll be looking for mobile breakdowns, breakouts, pocket pivots during the day, up and down, viable gap ups, some of my Q signal breakouts, and then as I pull it over here in the smaller resolution, I'll start looking for flashing lights telling me that there's new signals coming in. So I monitor these very closely in TradeStation, which is one of the strengths of TradeStation as well. So we've looked at the markets. We're obviously concerned. Didn't find any great stocks that popped out of me. I did see some that looked favorable. I see some potential shorts. I think the Fed head Powell speak on Wednesday will be critical. Trade safe, not necessarily trade off it until this market settles out. Had a lot of questions about what does Cigar's Q Edge do, because I've mentioned it several times. Let me just show you. I'm not going to hook up into data. But it requires Thomson Reuters. But what's really cool, and again, this is to me additive to HGSI because it doesn't have charting. And HGSI's data on your desktop allows you to go flicky flicky quickly. And when you have to use something that rewrites, it takes a lot longer. So let's give this a second to load up. All right, when it starts up, you can see right away 1 day in pink and 5-day sector performance. So I get a very quick sense of what's working and what's not working and see how weak energy is. Healthcare was positive on Friday, but weak over 5 days. And the least down, which I guess makes it the most up, is real estate. Now, you can update this as often as you want during the day and even can run continuously. During the day, I can look at best performing stocks. Volume pressure was something I had Sagar do for me, which kind of looks at like force, what's got the most force-like pressure, but not using actual volume, but rather looking at volume versus, how much greater is it than normal volume, not the actual, because a stock that has 20 million shares traded a day but did 18 is not high volume. Stock that does 500,000 a day does 2 million is lower absolute number, but it's much more of a volume pressure day as far as I'm concerned. And then looking at what he calls optimally valued stocks, growth stocks, and just get an idea of what's working, what's not working. On the sector analysis, he has the standard sectors. This was run yesterday evening, as you could see. And then I could rank them by how are they moving for 5 days. And the larger the number, the faster. I can look at over 1 day. And utilities, staples, real estate were the ones. Let's say I'm interested in real estate. I said several times that real estate looked interesting. I'm going to highlight real estate. And I am going to click here. I got to enable the content. 1 second. My bad. So when I do that, it's going to go into the next level down, or it should go into the next level down, which is the industry groups, and show me some of the different types of real estate that are available in the database. And let's look at what's been working over the last 2 days, largest to smallest. And I could see real estate services has got both a high number and is moving of late, where something like residential REITs and healthcare REITs really moved a lot yesterday, are also big numbers. Let's look at healthcare REITs. I've been liking those. I click on that. Now let's see who the folks are in healthcare REITs. And it will give me a list of the stocks and then the opportunity to take this list and drop it into HGSI or look at charts with Metastock or TradeStation. Now, what's interesting here is that it has a couple of things that I wouldn't look at, which would be Korean stocks as well. So I find this to be a very good program. They have a deeper fundamental analysis program called Vital. Now, I'm not a big fundamentalist, but it does look at optimal valuation and tries to find stocks that are overvalued to short and undervalued to buy. There is an add-in for Metastock, and he also has an add-in for TradeStation. When I start looking at, let's take a look at, for example, here's SRCL that made a screen of a stock that looks like it might be reversing. These blue dots are, I think, headwinds. Let's see if I get this right. Yep, and there's signals that perhaps you're starting to run into some support areas and you might be looking at a potential reversal. The auto trend lines I find very useful. I combine a lot of the different things I use so that I can look at a chart and import trend lines and the headwinds, but still keep my person and other indicators that I like as well. So that would be my screener, which is over here, the trend line. So I guess I'll leave you with these notes. Be careful. Don't worry about missing the move. You'll have plenty of time to get in once it starts. Play small ball until you have a reason to go long ball. Long ball would be shorter, long, big, and bigger positions, but you need longer term trends. On that note, I'll say goodbye. If anybody has interest in coming to the meeting that hasn't yet responded, you call me tonight. And email me rather mdonk@mindspring.com or PayPal to mdonk@mindspring.com, or also email me at hgsidoc@gmail.com. Trade safe, not often. Talk to you soon. Thanks. Bye.